Hey guys, and welcome to today's video. So today's video we're going to be discussing the ICT Daily Bias. So you want to understand the ICT Daily Bias, there are a few things you want to focus on and really pay attention to. Number one is draw on liquidity. The next is institutional order flow. And when we talk about institutional order flow, we're referring to the POO and displacement. So POO stands for point of origin and displacement. Then the second thing you want to pay attention to identify daily bias is time and price delivery. So these are the few things I believe, in my own opinion, you need to um, understand and focus on to be able to get your hands dirty in understanding the ICT daily bias. Now, a very quick disclaimer: you being able to identify the ICT daily bias doesn't mean you're going to go into the forex market or the stock market or the index markets to be able to trade every single day. No, it will only increase your capacity. You get what I'm trying to say, to be able to read price action. You get to see what the institutions and the market makers are actually doing on a day-to-day basis and on a week-to-week basis. And over time, that can formulate into you taking profitable trades. But there's no guarantee on that, but that's just going to be to your own discretion. Good. So without out of the way, let's look at quick examples to be able to drive home this particular idea we've outlined on the left side of the chart. So we said the first thing we want to look out for is a draw on liquidity. But the truth is that when we talk about draw of liquidity, it's not possible to be able to spot a draw of liquidity without identifying institutional order flow. That is why I actually grouped this draw on liquidity and institutional order flow on point one, because you can't easily spot a draw on liquidity if you don't understand institutional order flow. So let's look at this particular area right here in chart. So you can see price came down to this low right here, attacking this particular low. So we can see that we had a run on liquidity right here, and immediately price reverted all the way to the buy side. So we saw this impulse candle right here on the next day. Good. So if we bring our period separator and mark this particular area in price, you can see going forward with the benefit of hindsight, price moved aggressively on this particular day. But let's pretend like this particular day had not happened. So what you want to do is you want to see price run this particular low, giving us a point of origin, a quick rally away from that place, giving us a displacement. So you can see the displacement even with the body of this particular candle, which is the next day after this point of origin has been created. Now you want to drop down to the 15 minutes or the 1 hour, depending on the time frame of your choice you want to really hone in on. But the 1 hour will be my go to on this particular analysis here. So you want to focus on what price is actually doing right here. So now this is where this particular day, that particular day actually starts right here. So I'm going to zoom in just for clarity. So now we've already identified a point of origin right here. Now we've seen a quick displacement. Now the next thing we want to identify is the drawn liquidity, because if there's a point of origin and there's a displacement, that means price is reaching for something. Price is drawing to a particular area of liquidity. So that brings us to the next point of identifying the draw of liquidity. And the closest draw of liquidity is no other point than this particular high right here. There's no other drawn liquidity than that particular high right there. We can see with the benefit of hindsight that price actually went beyond this particular high, but we are looking at it in terms of this particular price action has not happened. You don't want to be aiming for futuristic price. You want to aim for what you can see right there on the forex chart. So without further ado, what we're going to be doing on this particular day that you've outlined right here is that you're going to be looking for reasons why price is going to want to push for this particular area of liquidity to the buy side. You get, now you've seen price tapped into this point of origin, give you a quick displacement. You know what I'm trying to say, and price is just giving us a retracement coming to this particular new day. You want to see reasons why price is going to push all the way into this particular area, and this is where time and price delivery actually come into play. So we're going to be applying time and price, and when we talk about time and price, talking about these Q zones. So I'm going to be zooming in properly again to be able to find clarity right here. So I'm going to be marking out the London session, because this is the Euro USD right here. The London session on this particular they will be here. Yes, exactly there. And I'm going to be marking out the New York section. That will be on this particular account is the New York session right here. So we can see that prior into this particular new day, we saw a little rally above this particular high right here. So if we outline this particular high in time, right there, we can see that we had a market structure shift right here on the 1 hour. So you can see, and that's a signal that price is going to be pushing for higher prices. Mind you, we've already identified that a institutional order flow from the daily time frame is seeking higher prices. So now we're on the 1 hour, we're looking for confirmations on that. And now we've seen that price is showing willingness to take out highs and giving us a market structure shift. So this is a failure swing. So price failed to take out this low, but chose to take out that high. Now we're waiting for price to come into our time zone, which is the London session right here. So price dropped down in this London session and all the way into where into a fair value gap right here. Now this is a fair value gap right there. Good. So price drop here into this fair value. So without even refining this O entry into the lower time frame like I would like to do, you can see that the moment price drop into this particular fair value gap right here on the daily, you can see the way price rejected from that zone. You can see the way the bodies of this particular candle closed above this particular area. That is a signal for your entry. So you can enter on this particular at the close of this particular candle and put your stops below this particular low. So that will be around 16 pips if you're using pips on some like brokers like forex and .com. But if you're using a broker like mine, they will be 169 pips right here. So you put your stops below that low. And where are you aiming for? You're aiming for the buy side liquidity, which is around 673 pips. On forex.com, that will be actually 67 pips. So you can see how you could frame your risk to reward right here, just using this particular system outlined right here. So just for clarity, I'm going to give another example again, still using the same approach. So right here, it's on the pounds, right here on the pounds. You can see this particular day price ran this buy side liquidity right here. So all you're waiting for is on a given day is, don't forget the process. We're looking for drawn liquidity, institutional order flow, and then time and price delivery. Good. So mind you, you cannot identify drawn liquidity without knowing what institutional order flow is. You get, and for institutional order flow, we need a point of origin and we need a displacement. So right here, so I believe this new day started somewhere here, right there. So you see, this new started here, dwindled for a while and went above this buy side liquidity, which is this equal highs and also a previous day high. Good. And immediately we saw how price rejected all the way from that particular area right there, giving us a displacement in price. So this is institutional order flow confirmed right here. Good. Now, where will be the drawn liquidity? This particular swing low here on the sell side, which is also the sell side liquidity. Good. Now, next, we want to start applying time and price delivery. So we've seen an expansion to the sell side. All we're waiting for what is a retracement. Now, that retracement must align with time. That's all we're looking for. So here, actually, 17 chart time, which is actually 10 a.m. New York time, which aligns with the ICT silver bullet. So you can see how price retrace right there into that particular fair value gap, giving us a reaction in price around that low right there. If I zoom that in for those of you that want to see that clearly, let me zoom that again. Good. You can see how price move into that fair value gap right there, and the bodies of the candles closed below the particular fair value gap. So that could be your entry right there. You could enter on this particular sell candle or this particular buy candle. That depends on you. Or you want to wait for price to clear these lows. That's break structure right here on this particular candle. That will still depend on you also, but you can actually enter the drop of this particular candle. So let's say you entered at the drop of this candle, you can put your stops above that high or above this particular fair value gap right there. So let's just put it above this particular fair value gap at 166 pips, and we're targeting the sell side liquidity, which is this zone right here, which is at 401 pips. So this is how you can actually use this particular process right here on the left side of the chart to identify the ICT daily bias. in very simple approach. Now you can see on this particular one, all we just needed was a 15-minute chart. We didn't have to do the process all the way from the daily to the 1 hour. We will identify straightly from the 15 minutes. So one more example before we call it a day in this particular video. So right here is another example on the GBP USD on the 15 minutes also. And this was actually today's trading. Good. So we can see that this day started actually right here. Good. And price moved all the way into this particular zone. So this is New York midnight. So in New York midnight, we had a liquidity run on the sell side, liquidity right here, and price gave us an impulse drive to the buy side, a displacement in price, confirming our institutional order flow, which is the point of origin. Point of origin is this liquidity run right here and a displacement in price. Good. So now we have institutional order flow. The next thing is we want to see a drawn liquidity. So a drawn liquidity is this buy side liquidity. And for those of you wondering what that buy side liquidity is, it is this equal highs over here. So this equal highs is the buy side liquidity we're actually looking for. So going back into the analysis right here. So we've seen price run sell side liquidity, give us a displacement price, confirm institutional flow. All we're waiting for is time and price delivery to align. So this particular line right here is the London session kill zone. So we can see that we have a lot of fair value gaps. So one could see this fair value gap, see this one, and also this one, and you'll be wondering which one should I focus on. All you need to do is you can use your Fibonacci right here to identify the 50% level right there. You can use the Fibonacci to identify the 50% level, which is around this particular area right here, around this particular area right here. So you could use a Fibonacci to do that. So that's the 50% area right there. Good. So all you're waiting for is for price to come within that particular zone right there, which is that 50%, and give you a form of your reaction in price. So you can see right here that price dropped into that 50% area and gave us an engineered liquidity. So price dropped here, and which aligns with this particular fair value gap right here. So price dropped here, giving us a swing low. You're going to say, and this swing low is actually an engineered liquidity. How do we know? Is because price went into this particular fair value gap, you're going to say, and rejected immediately, creating this particular swing low. And we can see going forward in this within this particular case of price ran this particular low as a liquidity, a sell side liquidity, using it as a reason to keep pushing for higher prices above this particular buy side liquidity. So you can see the moment price clear this particular low, price keep pushing out. So this is actually an engineered liquidity right here, because it was created for the purpose of pushing price to the buy side. Good. So you can see the moment price run this particular low, as long as you're already at the 50% level right here, this becomes your entry. So you enter on this particular candle, and you can put your stops below that low or below this particular fair value gap zone here, which will be that this particular candle's low. That will be 62 pips, and you can be aiming for this particular high right here. Let me remove this um, vertical line. So if you put your stops, let's say you enter here, you put your stops below there, which should be 62. You are targeting this particular high, which should be 191. So let's say you are very bold and you want to hold ultimately to the already identified buy side liquidity we spoke of earlier. So you want to put your stops here, and sorry, you want to enter that zone, put your stops below this particular fair value gap right there, and you can actually still hold for that zone. So in case you are wondering if you get wicked out, so let's just see clarity if that will happen. So let's say you put your stops below this particular low under that particular fair value. You can see even when price came down aggressively, he only attacked this low. It didn't come into that particular area, validating this particular fair value gap as a support level to see price push higher. And you can see holding up into the New York session, you can see how price pushed aggressively, attacking and sweeping this buy side liquidity completely. So this is how you can use this particular objective and focus right here on the left side of the charts to be able to identify the ICT daily bias on a day-to-day basis. So I believe you found value in today's video. If you do, hit the like button, hit the subscribe button. If you have your question or your thoughts, you can leave it in the comment section. If I went over something too fast in this video, I probably went over your head. I recommend you watch this video a couple of times to be able to understand the information shared in this particular video. Until next time, see you in more videos.